Hello and welcome to this weekly market recap for the week ending Friday, November 7th, 2025. I'm Tom Boley, Chief Market Strategist at earningsbeats.com. It's a pleasure to be with all of you again this week. Wow, what a wild week we had. Still no government data, still got the government shutdown. We did get an ADP employment report, though, on Wednesday. That was a little bit better than the prior months, but still showing a very difficult labor market. I think based on what we're seeing, I can't imagine that the Fed is going to do anything except cut another 25 basis points come December. I know that there's some Fed talk out there about, maybe not wanting to do it. I think they do it. At least I hope so. I think the market is expecting them to do it. So we will see. But in the meantime, we had quite a wild week. Saw a lot of selling, especially in growth names. It's been a while since we had a big sell-off in many of the growth names, but stocks like Palantir, which came out with great results, still stock took a big hit, probably down, I don't know, maybe $30, $40 off of its high around 210 before finally starting to rebound this afternoon. And we did get a nice reversal this afternoon on Friday. And it came at a good time, too, because the market was really teetering, in my opinion, at some key support levels. I'll go over a bunch of those with you in just a minute. Let's go ahead and start with the recap for the week. So start off, we'll go through, take a look at what happened among our major indices first. So first thing, transportation stocks, again, for another week, leading the action, gaining more than 2% this week as we saw many of the growth areas falter. You can look down at the bottom here, and you'll see NASDAQ 100 down more than 3% last week. So it was not a good week for the high growth oriented, the aggressive stocks. Many of the stocks that you find on the NASDAQ 100, many of those did take pretty big hits throughout the week. But money was rotating, and that's a good thing. Money rotated over into transportation stocks. We've talked about this and the fact that transportation stocks generally love the month of November, and we're starting to make that move. It looks pretty promising. We've had this before, so I don't want to get overly excited, but it is nice to see money rotating into that area and seeing some key areas of resistance taken out on the transport chart. We're going to get to all that in just a minute. But just note, transport's the only index among our six major indices that actually finished green for the last week. NASDAQ down, like I said, over 3%. Russell 2000 almost 2%. S&P 500 about 1 2/3%. The Dow almost 1 1/4, and mid caps mostly flat, but did finish a little bit negative territory. Moving on to sectors. Here's an interesting thing. When you look at the market and you get this feeling like, my gosh, it's just horrible out there. And then you look back over the course of the last week and you realize 7 of the 11 sectors actually were up this week. And that's the good thing about when you finally do see some selling in many of the growth areas like technology. One of the big questions for me is, does that money find a home in some of the other areas, or does it leave the market altogether? Do we see everything going down simultaneously? Well, I think this tells us no, everything was not going down simultaneously. We had some selling in technology and communication services and discretionary stocks. These are areas that had done the best over the course of the last several months, off the April low for sure. And so these are the areas that needed a little bit of a break, especially technology. And that's what we saw. So technology got hit, and I can always tell when things are starting to unravel a little bit, because I'll start getting more questions from members about, is this it? Should we be thinking about heading for the exits? And my comments all the way up until today and still today is that I'm not seeing any signs that suggest this is a big sell-off. So no, everybody has to do what's comfortable for them. I can't take on everybody's risk. And there's always plenty of risk out there, but I believe the risk is greater to be out of the market than to be in it, to be honest, based on all the signals I see, and we'll talk about a couple of those a bit later in the show. But I love seeing 7 groups going up on a down week because it's telling me that the money is not leaving the market. It's simply rotating. So we're seeing some profit taking in some areas like technology. And then some of the areas, some of the defensive areas, the more value oriented areas that have been beaten up are actually seeing some love for the last week. And I think that's a bullish thing. Energy, healthcare, real estate, financials, utilities, staples, materials, and industrials, or actually materials, not industrials. Those 7 groups finished higher. Now, industrials finished down, but industrials did beat the S&P 500 for the week. So they didn't lose as much as the S&P 500. And technology, which had been obviously leading the S&P 500 throughout the last several months off of that April low, took the brunt of the selling this week, although communication services and discretionary stocks also took hits as well. Before we look at those charts, I did write an article today. If you go to stockcharts.com, right here, you'll see articles and videos. You can click on that. Just go to latest articles. And you can scroll down right here. Technology selling is creating huge opportunities elsewhere. So just what I was showing you on that chart, on that sector summary, money is rotating into other areas. We're starting to see some liftoff in some areas that had been weak. And that's a good thing. We want to have more and more groups and more buying encouraged in some of the areas that have been beaten down of late. Anyhow, if you click on that article, you will see, number one, this is the sector summary for the last 6 months. So this just shows you the leadership in technology, consumer discretionary, communication services, industrials, the 4 groups that are red this week. It's just simple profit taking. And I know it gets scary, especially if you've been putting new money into the market at higher prices and then watching these big declines. But when stocks stay overbought, areas of the market that are so overbought, when they do sell off, they tend to sell off pretty hard. And so you've got to expect that from time to time. And that's what we saw this week. But what I looked at, and here you can see technology was testing its 50-day moving average. But a couple of things I pointed out in this article, one on this chart, notice the XLK, whenever its daily RSI has dipped down to the 40 to 50 range. I've marked it right here with these 5 black arrows. Look at what happens to the XLK. The last 4 times that we have seen the XLK sell off enough to get the RSI down to 40-50 range, each one of those moves marked significant bottoms. And so this is the 5th one. Now, we don't know what's going to happen next week. And at some point, uptrends end and RSIs don't hold. You don't get that 40 to 50 bounce. And eventually we break down and we start a downtrend. The RSI goes down to 30s, maybe even into the 20s if things get really oversold. But we're in a secular bull market. And like I said, my signals are telling me the market's going to keep going higher. That there's no impending doom out there, at least based on what I see in the signals that I like to follow. So when I see a chart like this, I lick my chops. I'm like, this is, we've been talking about how it's really important to get a pullback to get into some of these overbought areas. But then you get the pullback and everybody wants to throw up their hands and say, well, here comes the bear market. You're getting the pullback that everybody's been wanting. The XLK was up over 305 and it went down to 280. It was down probably about 7% at its low on Friday. And that's just over the course of maybe the last 7 trading days. But everybody gets upset when the market sells off and thinking, okay, it's going to keep going down. So I don't want to use this sell-off to buy or to, accumulate. Instead, I want to wait until we have the 30% sell off. Well, I think if you're waiting for that, I think you're going to be waiting a long time. So I would not be looking for that. But here you can see in this red shaded area, these are periods when, technology just underperforms for a period of time. And it's okay. It's all within a relative uptrend. You're not going to go up every day, every week, every month. You're going to have some periods of consolidation. You're going to have periods of selling, outright selling in technology, and it's okay. Now, I went on in this article to just talk about all these other areas. Here's delivery services. I'll just point them out real quick. Biotechs moving up. Industrial machinery making a breakout. Commercial vehicles and trucks continuing to trend higher. Heavy construction continuing to trend higher. Medical supplies breaking out above recent tops. Pharmas trying to make a breakout, but certainly trending higher right now. Apparel retailers just recently broke out. Broadline retailers broke out with the Amazon report last week. Steel had made a big breakout. It's pulled back now. Was just about to test a key trend line. So anyhow, there's a lot going on there. I could have pulled up another 10 or 15 industry groups. I could have talked about semiconductors, which remain strong. Internet stocks are absolutely on fire. Automobiles have been doing great. Did I say internet? Internet's been strong. Electrical components, electrical equipment, all of these different areas, renewable energy, tons of groups that are still doing well, that are part of technology. But the ones I focused on in this article were, these were industry groups outside of technology. But it's important to know that there are a lot of those types of opportunities out there. So let's take a look at the S&P 500. Nice hammer printed right on the 50-day moving average. Notice that today was the first time since we crossed above the 50-day moving average back at the beginning of May. This was the first time intraday price action was below the 50-day moving average. A lot of technical traders watch that level. It's not the most important level to me. For me, it would have been the price support, probably down here around 65.50 or so. But the 50-day moving average is something that a lot of traders do follow, and we were below it intraday. So had we closed there, many folks would have been selling it into the close because of a breach of the 50-day. Instead, what we got was a reversal, a finish on the high, and a successful test of the 50-day moving average. That's a big difference. I mean, the difference between an intraday breakdown and an end-of-day breakdown is simply where you close. And so it was nice to get that rebound. Look at the NASDAQ 100 for only the second time since the April low, since that reversal off the April low. For only the second time, we were below the 50-day moving average on the NASDAQ 100. Nice reversal into a hammer there. Small caps actually were breaking down. I'm going to annotate this, show you. There's price support. So we're below the 50-day, but what I like to follow is that price support. And to me, and what I told members earlier this week, we had a live trading room on Wednesday, and I said as the IWM gets down, I think it was around 241 on Wednesday, and I said, I'm actually moving into leveraged ETF. I actually like the TNA when I get down to key support. So we had all these bottoms coming across here at about 240, 241. So that was my first entry, or actually rotation. So what I do is I move from IWM into TNA, which is 3 times the IWM. And then I said I was going to do the other half if we got down to this low at 237, 238, which is exactly what we did. We actually went down a little bit, just a little below, enabled a second entry, and then you saw the big reversal back, finishing at 241.61. So I actually think this is a great time to be in the leveraged ETF simply because it's at support. Doesn't mean that we go higher. I mean, we could have a big gap down Monday morning. Everything could be falling apart, and it turns out to be a poor trade. But that could happen no matter when you buy. To me, the most important time to think about buying, especially if you're using leverage, is at support. Because if it doesn't hold, you can get out as at least as quick as you can. And that's my line of thinking there. All right. And then transports. Look at the transports this week. I kept saying, okay, I want to see 16,000. Let's get above 16,000. We did that on Wednesday, pulled back a little bit on Thursday, and then today had a really nice day, gaining about 1.6% on the transportation index, clearing every high, every close that we've had for over the last 3 months. So this was kind of a big deal for transports today. Now, we got a double top up around 16.5. Still got that level to get through. If we get through that, we got a double top over here around 16.9. Get through that level, but then we got prior highs. So it's one step at a time. But the first step was getting above 16,000, and we did that today. Now, looking at the sectors. So here is technology. We come down, we test the 50-day moving average. We reverse print a hammer. Looks good. XLY came down to this prior price support level, reversed print a hammer. Communication services. We actually have a little bit of a breakdown here below the October low, although we are in this gap support zone, and it looks like we held that with a hammer, another reversing candle. XLI, bullish engulfing candle. We've really just been going sideways since moving down on Tuesday in the industrials. We have not been selling off like we have in technology, but a nice reversal, closed near the high. Financials, nice move up, actually closed at about an 8-day high today on financials. So some of that money rotating over into the financials. We've talked about this on a relative basis. Financials, industrials really like the month of November. And maybe we're starting to see that here with some of the rotation this week. Healthcare went down, tested the rising 20-day moving average, came back up, finished at the high. Looks like we're on the verge of a possible breakout here. Staples have been very weak. So we've seen discretionary just absolutely crushing staples of late, which is a good sign for the market. And we'll see whether or not that continues. But that's what you want to see whenever you're setting new highs. The XLY XLP ratio, seeing that reach a new high is always bullish, and we did just do that. Real estate holding on to the support, all that support coming across and reversing off of it. Utilities, after about 3 weeks of weakness, got down close to the 50-day moving average. Nice reversal there today. Materials, a little bit broken down here. One of the worst looking groups, I think, technically, but we did strengthen. Going to have to try to get through that 20-day moving average. If we can do that, I think the technicals would improve here. Energy, we did close at the highest level we've seen in probably about 5 weeks on the XLE today. So as bad as it may have seemed throughout the week, when you pull up the charts and you just kind of forget about what you're reading and what you're hearing and everything else, and you just look at the charts, they're not that bad. Actually, it was nice to finally get a little bit of selling in technology. Now, if you are new to Earnings Beats, come over to our home at earningsbeats.com. You can sign up for a 30-day no-cost trial. You do have to give credit card for this, but this is for our paid service. But we do have a 30-day free trial. Check that out. You can scroll down. You'll see a free newsletter. This is no credit card required. Name and email address, all it takes. Literally, we have tens of thousands of folks that have joined us on the EB Digest. So make sure that you type in your name, email address. You also learn a little bit more about us, the way we approach the market. There'll be some trading candidates in there. If you're so inclined, of course, all the risks with those are completely up to you. I just simply give you my opinion and show you what I like or don't like about a chart. But check that out. Mondays and Wednesdays is when that normally is shipped out. I do want to mention here, we are having a huge event next Saturday. I'm really excited about this. Saturday, November 15th, Grayson Rose and Joyous DeKempen are going to join me, and we're going to do a fantasy draft. It's going to be a live stream event. It's going to be completely free. There will be a lot of smack talking. There'll be a lot of education too. And it's a little different because we do portfolios here at Earnings Beats, and we've been very successful. beating the S&P 500 over time with our portfolios. But when we go to draft our picks, our stocks for each of the portfolios, we have no competition. We get all the draft picks. So this is going to be a little different because I know my good friends, Grayson and Julius, both love relative strength, which is what I like when I'm putting together these portfolios. So it's going to make it really interesting to try to develop or try to draft a great portfolio when you've got two others taking some of the stocks that you probably would like to have. But anyway, it's going to be fun competition. Looking forward to it. There's going to be a surprise fourth guest that's going to be drafting as well. I'm not going to talk about that today. But if this fourth guest beats us, we will all be shamed for a while. And I'm talking about me, Grayson, and Julius. But I'll talk more about that. But make sure you register. You can click on that. It'll bring you to this page right here where you simply put your name, email address, and hit that submit button. If you are on your mobile device, we're going to make it really simple for you. All you have to do is scan the QR code. Go in there, sign up, name, email address, and submit your registration. And then when the event comes, we'll let you know. You can join us. We'll give you instructions on how to join the show and all. But we're really looking forward to this. We do these live streams quite often, and I think this is going to be our best one yet. I really enjoy getting together with Grayson and Julius. We've done many events in the past, and this one's going to be some competition. So I think it's going to be a lot of fun, and I'm going to beat them. I mean, I'm pretty sure I'm going to beat them. And if not, then I just won't show up on YouTube anymore. Anyhow, but that's it. Let's take a look at some stocks before we wrap up this thing today. So I'm just going to give you 13 stocks. These are all companies that reported either Thursday after the bell or Friday morning. Stocks that I think look really good. Now, first one, this is actually one of our portfolio stocks that got hit after earnings, but actually reported pretty good numbers. Came down, held on to this price support level, and is now starting to reverse off of it. So I see just sideways consolidation. And I think ultimately this is a stock that could easily go right back up and break out again. Next stock, SGI. This is Somna Group International. Gap up, breaking out above this double top. Look at the volume coming in, better than, more than average to support this move to the upside. PH, I'm going to show you a seasonality chart on this one a little bit later, right before we wrap up. But anyway, PH Parker Hannifin, big breakout there with its earnings report. Huge numbers. And of course, nice reaction, up about 10% in just the last couple of days. Outfront Media, look at this move, 14.4% on Friday, making the breakout above all these tops to a 52-week high. And look at that volume, biggest volume of the year, 6.5 million shares. One thing I don't mess with in the market, and that is a breakout with confirming volume. This is stock. We might see a little temporary pullback, but I believe this is a stock that goes higher. Maycom Technology Solution Holdings, MTSI, a lot of sideways consolidation for a while. No more. Big breakout Thursday and Friday. Huge reactions there. GenMab, GMAB. This one actually has pulled back a little bit, but I like it down here. This was an incredibly hot stock. Just pulled back here in the last 2-3 weeks to test what I think is pretty key area of resistance. I'd like to see this move back above those moving averages. That would be a great sign. Let's see. Next up, all the others I think pretty much are breakouts or just about. Giga Cloud Technology, GCT, one of the hottest stocks from April to August. Just kind of sideways consolidated here. Had a little trend line going down, equal lows coming across. So a little bit of a descending triangle off of an uptrend. Anyway, that broke today. Not only did we take out the declining trend line, but also this was the highest close of the year. Big volume, nice move there on GCT. JFrog, really big report, huge gap up, pulled back a little bit early in the day, and then we soared into the close. Again, look at that volume. Over 7 million shares, by far the best volume of the year to support that big breakout. Great looking chart there. Expedia, another one, big breakout, heavy volume. Datadog, big breakout, heavy volume. This is after sideways consolidating, little handle there, made the breakout. This one looks like it wants to go higher. DuPont, even boring DuPont, after kind of consolidating here, trying to get to 52-week highs, finally just exploded through over the course of the last few days. Really strong week for DD. CMI, this is Cummins. Nice little cup here off an uptrend, cup handle, back to the 20-day moving average, and another breakout like that one. And APPN, APPN. This is a software company that had been hot a few years ago, and it's just kind of been slipping and been an underperformer for quite a while. Check out the volume the last 2 days on this breakout. Stock was at 29 and change at Wednesday's close, closed today over 40. Big move up, and it did so with very, very heavy volume. Again, maybe we get a little bit of a short-term pullback, a little profit taking, but this is usually the type of move you get right before continuing move and breakout to the upside. So APPN looks pretty interesting. Now, I mentioned a lot of those stocks because these are the types of things I like to look for. Many of these stocks have strong AD lines. They're breaking out, big volume. We've got new information, new fundamental information in terms of earnings and earnings forecasts. And, a lot of people will look at a stock and it goes up 20% after earnings and they won't touch it because it's gone up too much. I think it's the wrong way to look at it. I think a lot of times when you get these big moves up, it's because you've got new fundamental information and these stocks were just simply way undervalued. You've got companies that are starting to raise their forecasts. Their growth projections are jumping. And at the same time, we're having lower interest rates. This is what sends valuations through the roof. And so many of these companies are probably just getting started. And so some of these might be stocks that I draft next Saturday. I don't know. Again, this is just stocks that had reported, most of them that had just reported in the last day or two. Anyway, PH, Parker Hannifin, I mentioned this one earlier. We do a monthly seasonality report for our members. And check out Parker Hannifin here. 95% of Novembers, it's gone higher over the last 20 years. Now, if you're not a math person, I can tell you that's 19 of the last 20 years. That's 95%. Only one November in the last 20 Novembers has Parker Hannifin gone down. And the average return is almost 7% per November. And now look at we sent this out to our members this week. So it's important not only to know the technicals and the fundamentals, also helps to know sometimes about the history and the historical tendencies of stocks, as you can see with Parker Hannifin. Anyhow, that's all I got for this week. I certainly appreciate everybody tuning in, and I will be back next week. We'll take another look at it. Based on the way we finish this week, I expect next week to be a good one. Of course, that means it might be a bad one. Either way, I'll be back next week and we'll go over it. Have a great weekend, everybody. See you next week. Happy trading, and make sure you sign up for this fantasy draft. And this is going to be a lot of fun. There will be, by the way, there's going to be some interaction with the crowd and all. So please, please, please mark your calendars. Come join us. Happy trading, everybody.